Happy New Year's Day. It is 1-1 with that perfect ring, 2011. Everybody has an opinion. MMTs are not public model related type individuals, nor do they make their decisions based on pundits, nor do they make decisions based on other people's opinion, but rather their own way of doing things as a market maker is using the SMF platform that allow them to make the right decisions in the transaction. A market maker transaction is quite different than the public Wall Street model, exchange model transaction, and how human beings like to meet at certain market prices consistently over and over and over and over again. Not only that, as the new MMTs are understanding with the platform, is that each one of these lines is a 1 delta line on the S&P weekly chart. So each line for Monday is going to be $4.77. Who knows? Maybe we go up 10 deltas. Maybe we go down 10 deltas. That's $40 movement. It doesn't matter. Maybe we go up 4 deltas. It doesn't matter. It prices all of the interaction between the buyer and the sellers. And back over here 1 year ago, right here, 1 year ago, this was the high. Okay, and that was on 111 of 2010, that weekly reversal bar. We're looking for something like this right now, because going into the new year again is that we are overbought on the actual indexes per se, because we are. And the thing about it is, on that opening bell, January 3rd, MMTs, is what you want to understand is looking for this this type of weekly move, but it will come clear to you on the daily charts in your 60 minutes, and using your other parts of various different brains within the system. What I can say is, just by looking in here, we closed at 1257, okay, and a 2 deltas up is going to be $10.30 in either direction. 2 deltas up, 2 deltas down on the S&P. If we are to go 2 deltas up, MMTs, then that would mean that the S&P would break higher to 1277. So between 1275 and 77 would be in that, or slightly below, a 2 delta move on January 3rd, one way or the other. So let's just get back to this bar, 111, January 2010. Slide that bid. Half bar at that time was 1140.90. And remember, once where it was over here would become new support. We'll talk about that later, MMTs. What I am going to do is clearly define the follow-up week that starts. This was a big weekly wick right up there at that time. And notice one thing, MMTs, these lines are Monday's market maker, weekly market maker lines. And each one of them is 4.77. What's really ironic, SMF MMTs, is how the public model transaction repeats itself all over. And they were all so bullish last year and all this and that, and it will slide that bid 4 weeks in a row. We did this short. We have these on our SMF website. So for the new MMTs starting this January out, is that we wrote the yearly formulas, and we can only write a whole yearly formula movement on these, on the S&P index. Once sometime in January we will. We wrote one for a whole year here. We're going to be sharing those with you so you can see how the last year in the S&P traded in the SMF mathematical pricing formulas. And that was right to the penny, I must say. Just like it was right to the penny. He shot that thing up and slid back to half. Down we went. This was the time to get net long. This is how the net longs came off of that bottom last year, MMTs. But let's talk about a market top. And let's talk about this weekly big bull breakout. Was a nice bull breakout. And the thing about it is, it maintained half of the SMF bars all the way up to the top of that reversal, then made the higher highs and took up to 2010 January reversal, or the this model over here, let's get that reversal. That was 5.3 that week. And that was the week also during the flash crash of 2010 that look at these big weekly sells and look at how they stayed below half of the SMF weekly bar that says to be short and buying the bear. All of those bear ETFs, we have a perfect example for the new MMTs to go back in the SMF live trading video database and look those up on this index here. We have them all. And we kept sliding the bid and we got right down here to that weekly line, right to the penny. What's ironic, MMTs, is how the public behavior, transaction, and emotion works consistently over and over and over and over. And it also breaks down the bear, the bull, and bear sentiment and conviction of where the parties were engaging at. Now, having said that, MMTs, so this is this week right here. And it'll tell us what week it was. There was $45 movement that week in the S&P. And we can take a look at the bid and ask trend ratio was minus 35 back then. And making down toward the bottom. Let's take a look at the half bar was minus 727. Back then that half bar was 1083.09 here, MMTs. It tells you in the info panel here. Now, having said that, MMTs, let's take a look with you on a market top for the new MMTs. And remember, new MMTs, you got to go back, and we're just going to take this part of the move. We're going to start, you got to go back and look at the other times we were actually going long here. MMTs, the new ones, that is, the live trades, and all the live videos are all live entries, as you know. So that way, when we start 2011 out, MMTs, you're starting it out in the right way. So this was that breakout handle that we had in our weekly platform at that time. The public was chugging right along, and we got right up to this top, because we did. November, remember what happened in September and October were phenomenal months as far as the historical stats that people used, the regular people, standard people, the public people, is they use public models. They use public models for their analysis, and people, that's why they're all on the same boat. And let me tell you that the most important thing is understanding these trends right here, you new MMTs, and how to be long call contracts, MMTs, during this kind of phase that will come upon you in 2011. You're going to have another yearly movement MMTs in 2011, and it starts January 3rd. You're looking where the top does this. It slides half of that weekly bar. This bar right here was done on 11/1, and that was 1202.37, which will be ultimately your down support level on when we do have a correction and we pull back. That's going to be your support level right there at 1202.37. But more importantly is, that's this one bar right here, is this bar right here. The date was 11/29, and that was 1199.61, and half closing half at 36.78, and that's what the SMF Market Maker platform does. It automatically equates the actual strength in the move. You're never left without doubt. SMF MMTs. Not only that, we're going to be looking for this topping pattern right here. And we're just going to take this part, and we're not going to look at any more except this week. This is where the 1129 was. This week right here, we're going to be looking to see, this week right here is 12.6. I'm sorry, 12.6 here. This week, let's see if we can get that one to populate. That's 12.13. That's the movement of the week, was 13.88, 11.2 the prior week, 17.88 dollar price movement both ways, doesn't matter. That was the raw movement, narrow range. So that meant you would have been getting eaten up on your call contracts and time premium like that. But that doesn't matter. We're coming up to this top right here. Here's this week. Okay, and let's see what that bar says. That's the 1220 time frame right here. 1220 time frame. And let's get to where we have the week is 1220 right here. That half bar is 1250.45. The closing price is 16.98. And that means that that's bullish in the cycle at a top. It's a bullish top cycle. Half bar is 1257.04 on the half bar closing, which is 7.19 ratio at that time. So basically you had a nice movement there as far as the narrow range movement of the holiday week to this wonderful day, New Year's Day. And we're going to open up on the 3rd. So basically, if this market's going to break higher, MMTs, we're going to be looking at the delta expansion in the brain. That's over here. The delta expansion in here is going to tell us how strong that S&P is going to be. Not only that, MMTs, these half-weekly bars are always 100% accurate. It's priced the public transaction in before they get there. It priced in all that whole model. And it's a market maker's model where either markets are going to fail or where markets are going to get made. And basically the public transaction model is where the controller is the market maker who controls the move. Gets the public to chase them like they like to do all the time, by the way. And then at times, there's time for reversals. So basically, this half bar is going to be the key right here. And I'm going to look at those gauges pop, MMTs. Let me see if I can get that. All right, so I'm having a problem here. Okay, in January.